Hello, ladies and gentlemen, and welcome back to The Economy Lately. I'm Anthony Smith, Chief Economist here, and of course, I am joined by the one and only South Turk.
Hey now.
And South, it's time to just jump right into it.
All right.
Yeah, I mean, this is our quick update for The Economy Lately, all the updates from late last week and going into this week and what we can expect going into next week. Kicking it off with retail sales. I got updated last week showing a downward movement of 1% in the latest release, but really a lot of the contraction came from one particular segment, and that's going to be retail sales for gas stations, which had a 5.5% monthly drop overall. This isn't too surprising because, of course, we did see the CPI and PPI energy components also move down over the same time frame. So definitely showing that there were some weakening prices overall for gas stations. And so that is definitely going to impact overall retail sales for gas stations. Also to note here that retail sales, the headline report is not adjusted for inflation. So any overall movements here can definitely be a little bit exacerbated as we see some prices come down in certain sectors. Overall, there was some positivity here in the retail sales report coming from retail sales for non-store retailers, and that had an increase of 1.9% on a month-to-month basis. So there was a little bit of a bright spot there. So we are still seeing some demand for the overall goods economy overall, but the inflation battle is not yet finished here. The other big thing that we have to talk about with retail sales or for overall gas station prices or gas prices overall in general, OPEC Plus, of course, announced that it plans to cut production overall starting in May. So there hasn't been any kind of significant price movements here just yet, but of course, we'll keep you posted. And if you want to learn a little bit more about oil or gas markets, you got to go over to check out John Kingston with Drilling Deep.
Drilling Deep.
Why do they call it that?
If you don't know, then, you know, it's... Never mind. If you have to ask, it's too much for you. But real quick, I do have a question. From the eyes of, Anthony Smith, Junior Deputy Economist or whatever.
Yeah.
Yeah. What's your favorite gas station? What's your go-to gas station for some retails?
I am gas station agnostic. I stop at anywhere.
Oh, really? So you don't care?
Sometimes I'll stop at one gas station, fill up, and then just drive on to the next one and just buy some Sour Patch Kids because I forgot to get that last gas station. CTE has done a number, let me tell you.
Okay, but what about regards to full service, if you get what I'm saying?
Next section we have to jump into is going to be around housing starts. So the latest number that we saw was a downward movement in March, with housing starts now showing a 0.8 decline for overall starts. A lot of the downward movement came from multifamily with a decline of 6.7% for the month. Now, this is also followed by the previous multifam report number showing that there was a upward movement in the double digits. So there was some substantial growth the month before. So a little bit of a downward movement here isn't too surprising. And of course, the multifam section is going to be a little bit more volatile. But there is still quite a few homes that have not been finished or still under construction. So there's that. The more concerning part comes from the permit side of it all, because on the permit side, we definitely saw that there was some downward movement here overall. When we're looking at permits, we see that there was a 8.8% decline for overall total housing start permits. So that is something significant. And for multifam, there was a downward movement of 24.3%. So that is significant and definitely going to be an indicative of future activity for future housing starts or potential new construction. So that is definitely going to be something significant and something to watch closely because, of course, the inventories for homes are still low. It's for existing homes and largely going to be dependent on new homes entering the market overall to help with some of those pricing pressures in certain regions. So that's definitely going to be one to watch closely as we continue to move into mid-2023.
What's the verdict as economist at large here at FreightWaves? Would you buy a house right now? Would you build a house?
No.
Build a house now?
No, I wouldn't.
All right.
No.
Yeah.
But I think every millennial is just waiting for that, right? You know, every millennial is just saw 08, 09 and just like waiting, like, hey, you know what? I just want to buy my house. I'm waiting for that 08, 09 to happen once again. And so I think a lot of millennials are on the sidelines just renting away, potentially paying some student loans here in the near future and just, saying their time is coming.
Yeah, okay. All right. I could just do like Japan, I mean, they've lost about 1 million population past year. They've kind of given up on the future,
Yeah, and houses there are kind of seen as depreciating assets. Like they just let their houses go and then say, hey, you know what, on to the next one, which is also really interesting. They build a ton of homes in Japan.
Yeah, well, Godzillas, Ghidorahs, Mothras. They always come knock them down, you know?
Yeah, you're right. That's so true. We need a show on that.
Yeah, the housing market in Japan due to Kaijus.
And right now, we're also still going to be watching for initial jobless claims as well. At the time of this recording, it's not quite out yet, but it is now officially hovering over 230,000 claims. So that is going to be one to watch. Not too concerning at the overall jobless claim level just yet, but that can change quickly. The big concern here is that continued claims continue to rise, and the direction is definitely pointing upwards. Going into the next week, we're going to have some releases to look out for. We get the long-awaited GDP for the first quarter. That's going to be updated. Also, the Fed kind of admitted for like one of the first time ever that they expect a mild recession. And if they expect a mild recession, I'm just going off of what we've been given so far. We were told that there was going to be no inflation. And then when there was inflation, they were told that there's going to be transitory inflation. And then we were told that, hey, our banks are fine. And then we were told now that there's going to be a mild recession. I'm just saying, if there is anything to go off of, and they're expecting a mild recession, maybe I will expect the opposite from that. I don't know. I'm just saying here, the track record isn't spotless overall.
Yeah, so you're saying they're probably lying to us.
It almost seems more like a PR instead of overall.
Lying to its people, once again.
You said it. You said it.
Hello there, George Washington, interrupting your program to let you know that these two hooligans of the economy are wrong. The government does not lie to its people, especially about anything involving a recession. So please ignore them. They will probably be sacked for their opinions. Stay strong, America.